Hello, it's Jill Fielding here, and this is what's caught my eye in the media this week. Well, of course, this is the week that the shops finally opened again, and estimates suggest that our spending has gone up by as much as 500% in this week versus a comparable week the month before, which would be an extraordinary boost to the economy. Every £35 billion worth of spending equates to about 1.6% growth in GDP on the economy. So this is the way that we will recover the economic position. 1.6% is about the normal annual average rise. So we could have spent that already this week, which would be amazing. The other thing about spending I found out this week is that car insurances have dropped by almost 50%. And that's because we're driving much less and have driven much less in the last year. So the car insurer's risk is lower. So if your insurance is up for renewal, please shop around because you'll get a really good deal, could save as much as 50%. The other thing that's interested me is that there's been some research come out of America about the definition of what's enough to make somebody happy financially. And it turns out that it's about 50,000. There's a range between, I think, 48 and 53. And that doesn't surprise me at all. That's about double the average salary in the UK. And I found in my work with wealth creators that when they start, they all want millions. They want huge amounts of money because they don't have money. Therefore, they think they need a lot in order to feel secure and happy. But once people get going on their wealth creation trail and they realise they have enough to feed the kids and the cat and to pay their bills and to go on holiday and to buy the car and so on, money ceases to be such an important driver. It's like water and air. Once you've got it, it ceases to have any importance. So that's encouragement for everybody in that the concept of riches and happiness and having enough is actually within everybody's grasp, because 50,000 a year is attainable by an average, normal, ordinary person in the UK. The other interesting piece of news was about 1% increments. Now, I like 1% increments because if you want to change 100%, all you've got to do is change 100 things by 1% and you're there. And it turns out that if you increase your pension savings by 1% in your 20s, it makes a 25% difference to your pension pot by the time you get there. And that's really fantastic because pensions in the main generally don't give you enough money, but just by increasing your contributions a little bit early on, then the long-term gain, together with compounding, will result in a much bigger pension pot at the end of the day. So if you're in that position, increase your contributions by 1%. And even if you're a little bit older, still do it because it will make a difference. There's been massive amounts of property news this week, and I've selected just a few stories to talk about. First of all, the introduction of the 5% deposit guaranteed mortgage, and that's guaranteed by about 15% on each loan by the government. Now, that sounds miraculous and it will enable lots of first-time buyers to get started, but there are some limits to it. It's only up to properties on 600,000. Not all providers are doing it. Not all providers are providing the loans for all kinds of properties. So, for example, some aren't providing them on new builds, for example. Also, the rates are higher. So the rates are probably about 1% higher on this 5% deposit scheme versus a 10% deposit scheme, for example. So although it's great to get started, be careful because there's a couple of caveats there. I was reading this week about planning permissions because we don't have enough houses in this country. Demand constantly outstrips supply, and every government since time immemorial has said we're going to build more, we're going to build more. And the governments have given a lot of thought in releasing planning permissions and including things like permitted development regulations, which allow people to build more freely. But it turns out that 90% of all planning applications get approved anyway. So that's a high number. But here's the rub. Only 60%, in fact, it's less than 60% of those approvals actually get built with a house or a property. So there's something holding up the building of the properties compared to the planning permissions. Now, some people would say it's the major builders holding onto plots of land, because of course, as soon as you've got planning permission on a plot of land, the value goes up. So it's a good way of increasing profits if you're a building firm. But there's something not quite right there. The building firms say that it's held up with red tape with local authorities and so on. But in order to resolve this demand and supply issue, we need to resolve this problem. We need planning permissions to be given, of course we do, but then we need the properties to be built at the end of the day. And I do hope that somebody's looking at that. As well as development, obviously, there are lots of people going into the property market, either for a residential purpose or for investment purposes. And it turns out that property investors and investments and properties bought by those investments have gone up twofold. So they've doubled in the first quarter 2021 compared to 2020. Now, that's amazing. And apparently the number of properties bought has gone up by over 100% year on year. And it doesn't surprise me, because property has held its own during the pandemic. It's continued to be strong, and it's created immunity for those people that did have property investments, because the rent still comes in, for example, whether there's a pandemic or not, in the main. And those figures have been borne out by the latest announcement by HMRC, the Inland Revenue, and they have declared that the number of property transactions in the first quarter of 2021 have been the highest since they kept modern records in 2005. And they say that the number of transactions in March 2021 was double what it was in 2020, and that prices overall are up by about 9% year on year. And it just goes to show that property as an investment just keeps on rolling, keeps on going, keeps on giving, and is virtually immune to the pandemic, which is fantastic for everybody that is a property investor. And if you're not a property investor, think about it. The stats will show that it's been the thing that's got through the pandemic unscathed.